LA Times reporting since the city put a cap on Airbnb rentals, home prices are now in free fall.
The party's over for Airbnb renters. The company said yesterday that its temporary ban on parties and other large, noisy events is now permanent.
I've put all my savings into my unit. I'm following all the rules, paying all the taxes, buying the business license.
To simply put it, the hosts tell me inflation is causing a decline in bookings.
I'm not going to sugarcoat it, you guys. We lost money. It's not looking good.
Is this true? Airbnb bust? People are running for the hilltops, losing money. There's people like Dave Ramsey that say this could be the worst possible investment that you could make.
You have a very good life. Don't go screw that up with an Airbnb.
There's people like Shelby Church saying they're quitting Airbnb for good.
You saw the title right. I'm quitting Airbnb. No, it's not clickbait. It just doesn't make sense anymore.
In this video, I'm going to break down each of the reasons why some of these headlines are valid. And if you guys are new to short-term rentals and Airbnb and thinking about getting started, I'm going to tell you exactly what I'm doing as an experienced investor should I decide to continue on investing in Airbnbs. The first point I want to make is interest rates are way higher. Now, historically, they're not incredibly high, but in terms of the past 3 to 4 years, they are double, triple, or quadruple what they used to be. Now, why is that important to you? The same $500,000 home that you may buy and put 20% down, today you're probably gonna get around an 8% interest rate. Your monthly principal and interest payment on that mortgage would be $2,935. Now, the same home 3 years ago, or even just 2 years ago, with a 3.5% interest rate would be $1,796. That is a difference of $1,139. That is how much less cash flow you're gonna make per month on that same property, just in the difference in the amount of interest you're paying to the bank. And if you extrapolate that over 12 months, it is $13,668. That is a lot less cash flow, and for some properties, that may make or break the deal. So if you're investing several years ago on that property, you might be able to very easily cash flow pretty good numbers. But today, an $1,100 difference is a big deal, and that may break people. The other thing is that it's gotten more competitive. So it's not as easy to make money because your costs are higher, but also it's more competitive. And in many markets, and we've seen some Twitter posts go viral for this, that revenue has tanked by 50%. Now, I've done videos in the past that debunked that video a little bit, really mainly because the headlines were misleading. Revenue was not down 50% in a lot of these big markets, but RevPAR, looking at 1 month year-over-year comparison from 2022 to 2023, were in fact down 50% in many markets. Now, RevPAR stands for revenue per available rental. So that's just taking the total revenue that a market generates and dividing it by the number of active rentals in that market. Now, why is that figure important? It's because if everybody had the same exact rental, right, and the same design, the same furniture, slept the same number of people, that means that supply has gone up faster than the revenue has. And because travelers have a greater pick of the litter, per se, of what rental to choose, they are getting, the better prices. So it's actually good for the traveler. So it's gonna cost them less to travel to that market, but it's bad for the average investor. We'll talk about how to combat this later on, but RevPAR is down, so you have to pay attention to those numbers when you're making an investment analysis. Cities are cracking down on regulations and laws, and this has actually completely pulled the rug out from underneath people in certain markets like Dallas, Texas, New York City, just to name a few. And then you also see places like Palm Springs started to implement a higher transient occupancy tax, which equates to like 10 to 15%. And that's not uncommon, but California in general is a place, if you were like, hey, Michael, out of all 50 states, which place should I not invest? California would be at the top of my list. They are not investor friendly. So when you're doing market research, you have to understand what markets are going to be friendlier to investors and what are probably going to be more likely to impose crazy changes in regulation. You have people like Shelby Church making videos which, by the way, I think is a little bit more clickbait to get views than anything. But she says that she's quitting Airbnb because of this new tax. Now, truth be told, what I foresee happening here in Palm Springs, for example, people are still going to travel there. They're still going to want homes with pools to rent with friends. Everybody has to impose that new 10% tax on guests. People are just going to eat it, and it's just going to be more expensive for travelers. It's like California does not want tourism and they don't want people's business. Like it's pretty sad to see. But my guess is that she's going to test it out and still rent it on Airbnb, and she's still going to be making a decent profit, more so than as a long-term rental. I may be wrong, but that's my prediction there. But you are seeing all these crazy regulation changes, like just outright bans like New York City, making it near impossible for new investors to come in and buy a place or rent it out and then rent it out on Airbnb. So you need to understand local regulations and then any tax implications as well. You have to learn how to be an investor, guys. I can't stress this enough. You know, you're not just a host on Airbnb anymore. If you want to compete, you have to think and act like a real estate investor. What I mean by this is you have to go in and look at all of the available data and resources online. You have to understand that market. A 3-bedroom property, you have to understand what zip code it's in, what are the comps looking like, what are places renting out per day, and what does their occupancy rate look like? What are my expenses? What happened in 2010 to probably 2020 is you could throw up almost any property on Airbnb and you would probably be profitable. No more. You have to compete like crazy. So doing a proper investment analysis is going to be critical because a lot of people out there, probably 50% of people getting into short-term rentals, probably just throw up properties on Airbnb and hope for the best. You couldn't do anything stupider than that. It's not just a simple investment and you're done, right? Because it's getting more competitive, not just on the investment side, but on the management side. People are leveraging all sorts of tools and software out there to be more effective managers and get better nightly rates and get a higher occupancy than you. People are learning how to drive direct bookings and get off of the Airbnb platform. So you have to be a marketer and treat this as a business, not just as an investment. And then Airbnb, speaking of which, people are opting to try and do direct booking strategies. Airbnb is really stripping away more and more control from hosts. It's making it harder for you to have control over your destiny. Now, it's a double-edged sword because Airbnb is the place that everyone goes when they're traveling to find a rental property to stay in. So getting direct bookings is a long-term strategy. You have to get contacts, you have to get emails and have a direct email list, right? Direct marketing. But they're constantly changing rules as well around how guests are able to get refunds and override your cancellation policies. Like you have very, very limited control as a host on Airbnb, whether you believe me or not. They're also changing all sorts of policies in the future I foresee coming, like stripping away cleaning fees to try and make it more affordable for travelers. It's probably not going to do that, but it's going to make it harder for hosts to be as profitable as they had in the past. Guests. This has been a problem for a while, but guests are getting smarter thanks to the big old internet. People are learning how to be scumbags and get refunds from it. Airbnb, this is a problem with them. They allow you like 72 hours upon check-in to see if something's dirty or broken. So we've had guests that check in and 3 days later, they're like, hey, this was not how it's supposed to be in the rental, or it was dirty, it was filthy when we checked in. But we cleaned it ourselves, by the way, but it was filthy. I want a full refund. And Airbnb, you have to fight tooth and nail in order to win that. So you have to provide evidence. You have to go out of your way to have your cleaners take photos before and after each check-in and check-out. We've even had guests start to cancel their reservations the last day that they can get a full refund, knowing that most hosts will drop their prices in order to get those dates rebooked, and those same guests will just rebook at the lower price. Like, I can't think of anything like more scummy and dirtbaggish, is that a word, dirtbaggish? It is now, than a guest doing that. Like, that is so trashy. So if you're a guest, don't do that. That's garbage. And we've even had a lot of guests blackmail us or attempt to blackmail us, saying, oh, we're gonna leave a bad review. We're gonna go shout from the rooftops on the internet if you don't give us a refund or a partial refund. This is after they check out and all of a sudden all these issues that they had during their stay come up. I don't know. But it's a problem because reviews are so critical on sites like Airbnb and Vrbo. You know, bad reviews can be detrimental to your listing. And people are also realizing that it's a lot of work to set up Airbnbs. It's not as easy as it was before. Why? Because you have to invest more time and certainly more money if you want to make a killing on Airbnb. You have to invest in professional design. You have to spend money on proper amenities, and those are not always cheap amenities, like a new hot tub, building out a fire pit, like game room, theater room, stuff like that. If you want to compete, you have to spend money. So it's hard for a lot of new investors to start when housing costs are more, interest rates are more, closing costs are more, your setup costs are more, supply chain issues, and then you get into a property, and if you don't have much money left over, how are you going to compete with somebody or a company or someone like myself who is now willing and capable of spending tens of thousands, if not, six figures just to include extra amenities that you will never be able to compete with me on. So it has become way harder to make really good cash flow in Airbnb. Now, with all that being said, it's definitely more challenging now than it was several years ago. If you are still looking to get started in short-term rentals, this is how I am personally continuing to operate and invest going forward, because it's not as easy as it was even when I got started in 2019. Number one, instead of investing into a higher quantity of new properties, I'm actually taking large sums of money and I'm reinvesting into the properties I already have. Why is this the case? Some of my properties, especially when I started early on and I didn't go crazy on the design or amenities, they were very basic rentals that I managed well and made good money, but I am starting to see some diminishing returns on select properties. So instead of saying, oh my gosh, these properties suck, I'm gonna sell them, I have a decent interest rate locked in on them. I know that it's in a good location, it's rented before. I'm going to reinvest money to completely redo the design and add new amenities per se. In Nashville in specific, I'm doing this here in a couple of weeks to boost my average daily rate. It'll boost my occupancy. It'll help me get a better stream of positive reviews, and it'll put me back up into that upper echelon of the top 75 or top 90% of performing properties. Like higher ADR, higher occupancy, better reviews equals what? More money and more revenue and a more fruitful investment. So I'm going to see a higher ROI by reinvesting into property, in some cases than investing into new property. And as far as investing into new property, especially if you guys are newer, what I'm doing is I'm mainly focused on larger vacation markets or mid to large size vacation markets instead of urban areas because of all the regulation changes and in the types of property I want to invest in. I would rather get one big property than three smaller properties. And I would rather spend 3x the money on amenities and design on one property than go cheaper just to get three. Because I know if I get a bigger one in a vacation market and I go crazy on the amenities, I'm going to eliminate like 99% of my competition. And I want to wait and be patient for investments because I'd rather hit home runs than hit a bunch of little singles at this point. Starting out, it may be different. You just want to get some skin in the game, get some cash flow going. But at this point in time, guys, I'm just trying to get like $8,000 to $10,000 to $15,000 a month in cash flow per property. And I know the only way to do that is to go big and go all in on one property. And this is crazy amenities like adding pickleball courts, a putt-putt course, golf simulator, movie theater rooms, game rooms, crazy fire pits, home gyms, all that good stuff. You have to focus on selling the experience if you want to compete in today's market. And not just today, but if you want to compete 5 or 10 years from now, you have to sell and compete on value. Why? Because if you don't, guess what you're going to compete on? Price. And that is a loser's game in any industry that you operate in. If you're competing on price, it is what? A race to the bottom. And we don't want to be on the race to the bottom because that's where you experience diminishing returns, especially in a rough economy. If we have a recession or another, COVID era or whatever it may be, if less people are traveling, they're going to have more rentals to choose from. They will still pick the top rentals with the best experience and pay for them. But everyone else is going to drop their pants on price, and it's going to be pretty brutal in terms of your cash flow. Next, I'm focusing mostly, and I'll call this the AIRBNB model. If you guys are not familiar with the BRRRR strategy, it stands for buy, rehab, rent, refinance, and repeat. You can leverage other people's money or private money to fund the deal and the rehab. And basically what your goal here is to buy a property at an undervalued price that needs a lot of work. So most investors will shy away from it. And then you're going to spend a lot of money to rehab it and increase the value of that property. Once you rehab it, you're going to go to the bank and say, please, I would like to reappraise this property. And they're going to get it appraised at a higher value. And then you're able to take out a large portion of that money back out of the deal. And in a lot of cases, you can take out 100% of that money invested back out. This is what the traditional BRRRR investors are doing. They're leveraging private or hard money. They're funding this deal. They increase the value. They pull out all that money, pay back that investor off. They now have 20% of created equity in the deal and a cash flowing asset. Now, if you do that with the Airbnb model, the AIRBNBUST method, this is like BRRRR on steroids because you're going to get crazy revenue and crazy cash flow. This is also a better way to build serious wealth long term, because if you're constantly rinsing the same money and pulling it back out of the deal, you can reinvest into the next deal faster versus just buying a turnkey property and then waiting to save up another 15 or 20% down for a down payment. Intense deal analysis. So this is something I've always done, but I've gotten more strict on my criteria, and you should do this too. If you are not doing a deal analysis, go to strhub.co, so strhub.co, and create a free account. This is a totally free website that you guys can do deal analysis. It's very plug and play. And what's great about this is you need to run multiple scenarios. So run your most likely. Everyone likes to run a high scenario. Oh, if I really just knock it out of the park, we could be renting for $500 a night and we'll be 90% occupied. But what happens if you don't? What happens if you come up short or there's a bad economy for a year? What does your low side forecast look like? Look at the different scenarios. And on the low side, you want to see like a 7 to 10% cash on cash return. Conservatively, you want an 18 to 20% cash on cash return. And then high side, it doesn't really matter at that point, but upside, I usually look for 30% plus. So go to STRHub, do a free account. I also recommend using AirDNA or another site where you can grab data in a market. Now here's the kicker. This is where a lot of people made a huge mistake over the past few years. They jumped on the Airbnb wave and they were only looking at the trailing 12 months worth of data. Why is that a really awful decision? Is because post-COVID, when travel went crazy, especially in these rural markets, there was a huge spike in demand and a lot of people stopped investing the year prior or got rid of their short-term rentals. So there was limited supply. What happens when there's crazy demand and low supply? Average daily rates skyrocket, occupancy skyrockets, revenue and cash flow skyrocket. So what new investors were doing is they were looking at 2021 information saying, oh my gosh, I'm gonna rent for this daily rate and this occupancy. Meanwhile, in 2022 and now 2023 and going to 2024, while demand is still good and up from pre-COVID levels, it is not at the same heights as it was in 2021. So that is how you guys can get really in a hard place, is when you over forecast and then all of a sudden you're struggling, especially with an increased purchase price and a higher interest rate. So make sure you're looking at multiple years worth of information. So those are the things I'm focused on. Just to recap this video, I don't think Airbnb and short-term rentals are dead. I think a lot of people are posting these types of videos and articles because it's clickbait, and people, bad news sells. People want to click on and be told horror news so they can just stress and be anxious about it for the next day. It is not, super easy anymore. You have to do the research, you have to set it up the correct way, you have to spend money on the right things, and you have to manage and compete. It's not 100% a passive investment, it's not. So those are the things I would do. Be careful who you listen to and who you take advice from, but definitely do your research and don't just blindly invest in a deal, because that is a quick way to really regret investing in short-term rentals and Airbnb. If you want to learn how to be successful and still have the opportunity to cash flow thousands of dollars on short-term rental properties, make sure to follow this page.